Good afternoon, hey traders. We are back with another live stream. Brock Algo here, looking at no-code algo trading software, Arrow Algo, and building some more live strategies. So we started the other day by building a bit of a candlestick breakout scenario. So the idea today was just to carry on, really. Keep walking through, see if we can make some improvements, see if we can start building a more profitable strategy. So as I get myself set up here, I'm just going to move some screens around. Bear with me. Hold the phone call up. And we can get ourselves set up. As always, any questions along the way, stick them in the live chat. I'll be keeping an eye on them throughout. And apologies if you get some buffering and some slow throughput. I think there's a bit of traffic on my bandwidth today. Okay, so let's get the screen share on the go and make a start. So as ever, we're going to be building today with Arrow Algo. It's our no-code algorithmic trading software. You don't need to know how to write code. You can build, backtest, and run algo trading strategies using a block builder based interface. It's absolutely free to use. When you're ready to run strategies live, it can send signals to buy and sell signals to your exchange account. So it can only send buy and sell signals. It can't withdraw from your account, so your money's completely safe. And it is very easy to use. I'm not a coder myself. I'm not a programmer. I've got a bit of financial background experience, but it took me, no time at all to learn this software. So that's the idea of these sessions, was to share the knowledge, really, share the learning. So if we log in, here we can see some of my running strategies at the moment. We're in the middle of a bull run, so obviously the market's doing fairly well. Some of my strategies, a couple of stop losses kicked in earlier a few weeks ago, but they're starting to pick up now as we had that correction in the market. And this is the strategy that we were working on, the candle breakouts. So you can see from some of our backtest results here, we managed to start making some profits. We had a fairly low win rate, around about the 40% mark. And then we started trying some things to see if we could improve it throughout the session. This is where we got to. For those that were here will remember, we were looking at candlestick scenarios on a 4-hour pattern, and we were trying to see whether we could come up with a strategy that would work out when to buy based on breaking above these candlestick formations. So open up my trading view. We were basing it on Solana, on the Solana tether pair. If I open up that here, we were looking on a 4-hour chart. And we were looking for candles. So if you remember, we were looking if we had more than one bearish or bullish candle within the 4-hour chart, within about 6 candles of each other, then we were looking to set a buy when it breaks above. And similarly, if we had 2 bullish candles, again we were looking to buy when it breaks above. So that was the idea behind the strategy. And this is where we got to. So we used candlestick blocks, feeding in the 4-hour high, low, open and close data from our data watches of the 4-hour candles, and we were feeding these into our candlestick indicator blocks. And if you recall, we'd spent some time setting these all up. We had a few bullish candles and a few bearish candles. And we were looking at the current candle plus lag 1, lag 2, lag 3. So this is the current candle, the previous lag candle, so that's the last candle before the current one, the one before that, the one before that, and the one before that. So we're looking at the current plus the last 5 candles, and we were checking whether any of these were displaying any of these patterns. So whether it was engulfing, harami, bearish. I've just released on my TikTok a few videos explaining the difference between these candlestick patterns, so you can go and check them out. Essentially just looking at the shape of the pattern, the shape of the candle that we're looking for. So for example, this harami, talking through the fact that harami is contained within inside. It's a candle that's contained within inside the last candle, and engulfing, for example, would be the opposite, a candle that completely covers the last candle. And these are generally signs that traders will look out for, because they indicate a potential shift in the market. Sometimes they can just be a correction, or sometimes they can be a full reversal of the trend. So there's a few candlestick formations that I've pointed out in those TikTok videos. Go and check them out. But here with this strategy, again, we've managed to use this to automatically detect when these candlestick formations occur on the 4-hour chart, and then we're going to set buy orders when we see a breakout above those lines. So we've got a few condition blocks in here. We've got an OR block under each of these candlestick settings. So for this one, for example, if we see a bearish hammer formation in the current candle or in any of the last 5, then we're going to feed that into this condition block here, which is looking, this is an OR symbol, this double line here. So if any of these trigger, then we can follow that line up. We're going to trigger this indicator block here, this condition block here rather. So if any of the last 5 candles were a hammer bear, an engulfing bear, a harami bear, a kicker bear, or a shooting star, then we'll trigger this condition block. And then similarly, this condition block is looking at the current candles. So we're saying if one and any one of the last 5, and these are feeding into an AND block. So these are 2 of the conditions in this AND block. If 4 conditions are met, then we'll trigger our buy order. The other 2 conditions we put in yesterday. The first one was looking at RSI on the 1-hour chart, and we had that set to 65. So we wanted the RSI to be under 65. So the point of that was to try and filter out some of the noise, filter out some signals that may have been occurring in unfavorable conditions. And the 4th rule was this one here. We were looking for the 1-hour price to be above the SMA 200. So the simple moving average for 200 hours meant that we were only going to catch signals in an up market, and we weren't going to catch signals in a down market. And we can see that in action by adding in a nice simple moving average here. If I set that to 100, Change this down to a 1 hour chart. Generally when the price is above that moving average line, it means that we're in an uptrend, and when it's down below, it means we're in a downtrend. Generally speaking, I mean, there are nuances. You can be down and on the way back up in a correction, and hopefully that's what we're going to tackle today. We're going to look at how we can make some of these rules a bit smarter. So one of the last things that we looked at yesterday or Friday was in our back tests when we looked at it. We were going through the results of the back test and trying to think about what we could do, and we noticed that under a few occasions we had scenarios where, first of all, we were perhaps selling a bit too early when the market was still in an uptrend. So one thing that we could do is see if we can get that sell signal to not trigger so quickly and ride some of the waves a bit higher up. And the second thing that we noticed was that sometimes we don't quite catch the top of the market on the way back up. On the way up, we wait for it to dip down a bit before we cash in. So it was how can we adjust our sell rules to make sure that we are selling at the top of the market. So I think those are the first two things that we want to look at. So this is our current strategy. I will go back to a previous version because I was doing a bit of other playing with it. Let's come back here to this one. Now, one thing I'm going to do, first of all, is we set this to be a buy limit when the price was indicating that it was going to be breaking above, which sometimes we get these patterns and then the price never gets above. However, if the price does break above, then we still want to purchase. So one of the things that I think we're going to do is change our buy orders. So rather than setting these at limit orders, I think what we're going to do is wait for the price to physically break above and then buy at market, just so that we get a slightly quicker signal. So I'm going to change that from a limit order to a market order. And we still want the price to be above this. So what we're going to do is set another condition, and we're going to have a look at whether the 15-minute price has broken above that 4-hour minimum in this case and maximum for the bear candle. Now you'll see I've got a variable in here. That's because we're triggering this on a 15-minute candle. So it means this data watcher is going to feed in a new price every 15 minutes. However, the 4-hour candle, the 4-hour data watcher is only going to feed in a new price every 4 hours. So when the new 15-minute candle block comes in, it's only going to trigger if this is feeding in data at the same time. So what we're going to do is, for each time a 4-hour candle adds new data, we're going to save that as a variable figure. So that 15 minutes is being compared to the variable value, as opposed to having to wait every 4 hours for a new figure to update in there. And we're going to add that in as an additional buy condition. So the 15-minute price is above this value. And we'll do the same on the bear candle side. 15-minute price is above that 4-hour max. And that will create us a buy order. So first of all, we'll just save that. We'll run a quick retest on that to make sure that we're getting lots of signals nicely. And then while that test is running, I think we worked out the other day that we were taking about 1.5 minutes per test, so we'll leave that for 1.5 minutes. And then we'll start looking at these sell signals and see if we can start catching them at the top of the market. The reason I've gone back to this previous version is because we, if you remember, added a stop loss right at the end of the last session, and it created lots and lots of sell orders, so I just wanted to get rid of that because we were only providing it as an example. We will add a stop loss back in later as well, but we'll look for a slightly cleverer one than the crude one we had before. So for the sell conditions, before we were looking at the 4-hour closing price, and we were looking at whether the current 4-hour closing price was less than the last one, and whether the last one was more than the one before that, and whether the lag 2 was higher than the lag 3. So essentially we were looking for a rising candles followed by a falling one, and we'll be able to show that visually on the chart as well. So if I change this to a 4-hour candle, again, this is the kind of action that we were seeing. 3 rising prices followed by a falling price. Well, 2 rising prices followed by a falling price. So we're going to see if we can make this a little bit cleverer. And one thing that I like to play around with is the linear regression slope. So this is looking at essentially the slope of the curve. For those that are into maths, you probably know all about it. There's statisticians out there. But essentially it is, you don't need to worry about the underlying calculation because obviously the indicator is already programmed in. So we're going to look for an indicator called the linear regression slope. And I'm going to take this time frame down a bit actually. I'm going to look at 1-hour candles so that we can get a slightly quicker signal. So we're looking at the slope of the candles here with this linear regression, and then the other thing that I'm going to do is look at the rate of change. So we're looking for how quickly is the slope of these candles changing. And again, I want to see that acceleration of the price slowing down a bit. So I'm just going to use the same setup with the lag 1, lag 2, lag 3, and I'm just going to replace the actual price with the rate of change of the slope of the graph. And I think we can probably set some more rules in there as well. So obviously we want this to kick in bullish conditions, so we'll probably look for some kind of rule making sure that it is only taking profit rather than activating a loss. But for now, why don't we see how that gets on its own. So we'll give our backtest a name. We'll say we're now buying at market, and we've got selling on Linreg rate of change. 1 hour. And while that's running, we can see the previous results. So this was the first test that we just ran, looking at buying at market rather than buying a limit order. And you can see nicely what we mean here. On a couple of these, we see this rising price and then a dip. So we want to try and catch it at the top rather than just after this dip. And that took 2 minutes and 25 seconds. So you'll see that the more rules that we add in and the smaller time frames that we're calculating on these candles, that the time may increase, the more complicated your strategy is. My friend likes to play around with unbalanced volume on a 1 minute basis, which really slows down the test time. Okay, while that's running, let's start thinking about the next rules that we're going to want to stick into this. So a few of these rules, I mean, I know it's a breakout strategy, so we want to be catching it on the uptrend, but what it might be nice is if we can get something that buys at the bottom of the market as well as the top. Might be a nice thing to add in. But let's carry on with how we are for now. Okay, so this is the results of the test with the rate of change. And what we can see here is that's really increased the amount of sales. It sells quite quickly after the buy. In a lot of these cases. Interestingly, so let's see if we can filter out some of those noise, see if we can ride some of those waves a bit higher up. And I think I'm going to do that by adding in another rule to say, let's not buy if the 15-minute price is still on the rise. So if we go back to those test results, particularly in here is a nice example. We wanted to ride these waves a little bit further up, so we're around early March there. If I stick it down to a 15-minute time frame and go back, And we've sold out here, for example, when the price is still on the rise, so we wanted to ride that further up. So we can do this with a simple moving average. So the 15-minute price is above the moving average. Let's make this slightly longer, maybe 20 periods. Then we can tell it not to sell, because we want to make sure that we're not selling out too quickly and that we're riding that wave a bit further up. So let's say we want this price to be less than simple moving average before we trigger a buy, bird sale. Otherwise we'll keep riding up, and we'll repeat. And you can see how this is really an iterative process. Come up with a theory, hypothesize it, test it, validate it. Is the way that I like to operate. Some of you may come up with some fantastic strategies on your first attempt. Fair play to you if you do. The one thing I like is that how we've managed to get most of these buy and sell signals only occurring on this uptrend. So we're only buying in rising markets, not in falling markets, which we managed to do with this hourly price over the moving average. But there's still the odd occasion where we're buying in a falling market. So we see there, it was still above the 200-day moving average, but the price was still falling. So there may be something we can do to smarten that up a little bit more as well. Perhaps using the MACD might be a good idea. So here's the results of the last test. don't sell unless the price is under 15 minutes. So hopefully we should see some better sell signals here, and yeah, there we go. Got some nice sell signals here at the top of the market. It's still slightly after the top, but it's closer than it was before. And we've still got some noise around here when the market's relatively flat, so that might be something that we can look at as well. So the MACD rule might catch these as well. So let's try that for a theory. So we were looking at an hourly chart, so we're going to add in one more rule for these. And let's reuse this data watcher. This is getting a little bit messy, so let's move these down here. Just clean this up a little bit. So we also want to see this 1 hour moving average convergence divergence. Also we'll stick in the moving average convergence divergence indicator block. We'll copy this condition block and say on the 1 hour chart we want the MACD to be higher than the signal. I mean, another thing that we could have looked at potentially is the super trend. Might have given us similar results as well, but the idea is essentially to make sure that we've got an uptrend, trying to buy in a trending market. They're both trend indicators. So they're relatively similar. When the super trend is trending buy, the MACD is also above. I did a video on my YouTube channel a couple of months ago about different types of indicators and what situations to use them in, and this is exactly one of the points that I was making. If you've got more than one trend indicator, they're probably going to give you the same information, so there's no point overly complicating scenarios if you don't need to. So we'll have a look at a couple of these signals that we're looking to get rid of. And see which one suits better. So that one. MACD was above the signal there. The super trend was trending sell, so we would have got rid of that one. We would have got rid of that one for the super trend, but not for the MACD. And we would get rid of that one with the super trend, but not with the MACD. And this one, yeah. So let's try that instead. Let's do the super trend instead of the moving average, convergence, divergence. We can do one of each and compare the results. So for the sake of time, I'm just going to run a quick test using the same output indicator block, and let's test that one. Then we'll go back in and replace that with the super trend. So for the super trend, you'll need to input the closing price, the high price, and the low price. So that means some more data watcher blocks. So we've got the high, low, close, and I tend to use the close as the source. We're looking at an hourly sell trend, buy trend rather than a sell trend. And again, I'll feed that across. And we can have a look at that for comparison. And we can see that we've already improved our win rate just by adding in that rule. So we're up to 56% now. Returning 32% against cash, minus 12 against Solana. Remember our test period, we were looking at 6 months, just looking at year to date. And if I just take a scroll down through the orders themselves, none of these losers are particularly bad. Sometimes you might see a big outlier with 10-15% that really skews the results. The maximum was a 5. 5% loss. So let's see if we can find that one. I mean, generally we're only buying in these conditions if there is a breakout, so it'd be pretty unlucky not to, if we've got our buy conditions right under those circumstances, unless it's a false breakout. You know, we're doing what we can to try and avoid that situation. We are looking at the 15th of March. So let's see what happened there. Here we are in the middle of this little messy period. While that is, we'll just take a quick look at the other results. And interestingly, with the super trend, we had a higher winning probability, but we only had 6 trades. So obviously by filtering out trades that only occurred when the hourly super trend was trending buy, we've actually cut out a lot of our buy orders. So the idea was to filter out bad signals, but we've obviously filtered out a lot of our good ones as well. So let's keep with the MACD for now. And see if we can see what was happening here. So we can see here we had a bullish engulfing there, and another one here by the looks of it. So this is why we had this buy order, because we then broke above this level after these 2 bull candles. And then the price started to fall. And that was a pretty significant drop. So we've got 3 15-minute candles there. And we've seen a 5% drop. I mean, under those kind of conditions, this is probably the sort of level that a stop loss would have kicked in anyway, had we had one in place. So I'm not too unhappy with that. And we're over 50%, so I'm overall relatively happy with this so far. So how can we improve it? Well, we've got this particular strategy buying when we see these breakouts. So the other thing that we could do is maybe try and catch a bit at the bottom of the market. So I know that I'm changing the overall philosophy of the strategy now, but I've got something nice here that I'd like to build on. So why don't we add in a few rules to see if we can catch something a bit lower down rather than just these breakouts. I think I'm gonna carry on playing with that idea of the linear regression. So let's add in some new rules. I'll just clean this up a little bit, a little bit of housekeeping. Make sure it's all in the group. So as we said before, let's go back to our results. So what we were doing with the sell order is looking at the rate of change of the slope of the graph of the candles. So one thing that we could do is look at putting in an opposite rule to see if we can do the opposite, catch that bottom of a downswing. So let's go with a similar setup. Looking at the closing price, data watcher, a couple of lag blocks. Lag 1, lag 2, lag 3. Now look at our linear regression slope indicator, and we're going to be tracking the rate of change again. And let's put these in a group. And we're going to see if we can catch the bottom of these swings. So we're looking for the rate of change to be starting to pick up. So we've seen it down, accelerating, 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 and then increasing again. We can put the linear regression on here. So you can see as the price is falling, the slope's getting steeper, falling quicker and quicker. The linear regression is falling, and then as it comes up again, so we're looking for it to be falling and then on the rise. So we're going to say the current value is higher than the last one. But the last one in turn was lower than the one before. And the one before was lower than the one before that. And if that's the case, we'll create an AND block. And if all three of these are true, we'll create a buy condition. And let's see if there's any other criteria that we want to add in here. So for example here, it would have been nice to buy around about here and ride these waves up, or around about here, because we didn't buy until it broke above, which was over there. So could we have got that a little bit earlier? Hourly RSI we can see is below, so that might be one thing that we can stick in. Of course, we don't want a catching falling knife and buy in the middle of the market when it's potentially all the way down as well. So another way that we could track as well as the linear regression is perhaps by looking at some sort of short-term indicator that the price is on the way back up. So why don't we look at a smaller time frame? And then perhaps something like a whole moving average. Maybe set that a little bit longer. Let's set it at 50. So what we can see here is we've got this nice shift here, and then the price bounces back up above that on the 15-minute time frame. So you'd still see at the end of the hour, each 15 minutes, you'd have the calculation on the linear regression, but you'd see, looking at the shorter time frame, if that price is on the way up, then that gives us another indicator that potentially it's going to be bouncing back. So let's try that as well. We're still looking at the hourly linear regression, but we're going to create another day to watch out, looking at a shorter time frame, and we'll look at that in comparison to its whole moving average. I'm sure there's a few more things that we could do with adding in here, but let's have a look at that as it is for now and see how we get on. So we know in this test we've still got our breakout buy scenario. So we'll still see it when the price breaks above these candle formations. However, now we should now have a few buy signals a lot lower down. So we've potentially got two chances to make money. One of it breaks above, and one of we're catching the bottom of the downswing. And hopefully we're not going to be catching too many falling knives on the way down. We might have to stick in some more rules to make sure that we're only buying when we're certain that there's going to be a retracement in the market. And our last test took 1 minute and 53 seconds, so we're still looking pretty fast on the back tests. We've not made it too complicated yet. The one thing I like about this is that you get a live update of how your test is progressing as well. Every minute this will update. And there we are, so now we're up to 246%. Our win rate has dropped down to 40%. Profit loss ratio is still not bad, and similar returns. So we've got a lot more noise in here now. So one thing that we didn't do is name the block, so we can't tell the difference between which of these blocks are the buy block and which one is the linear regression block. So that's one thing I need to do. Is rename the block. We made a copy of the bear buy block, that's why they're all called bear buy. And while that's running, we can have a flick through here. So, I mean, the first thing that we can see is we're now buying quite a lot on the downtrend again. So we added in that rule into that other set of buy orders that said don't buy when the market's in a downtrend. Now this is going to be slightly different because we're trying to catch the bottom of the market, so naturally that it will be some form of downtrend. However, that doesn't mean we can't be smart about this. So we just had the two rules to start with. The first was the linear regression slope, the second was to do with the price and its whole moving average. There we go, that's more helpful for us. We can see which one is which. So the first thing that jumps out is there's a few times here that this linreg buy kicks in and we have to wait for the sell conditions that we previously put together to buy, and we're missing out on a couple of these tops. Particularly when you're looking at a bit of a swing strategy like this, you need to make sure that you're taking these profits, otherwise there's no point buying at the bottom if we're not going to try and catch the top as well. So let's start thinking about some other changes for this. I'm maybe going to think about our existing sell. And I quite like what we've done with this so far. I mean, that the idea of this was to make sure that we take profit after the breakout. So why don't we add in some of those factors that cause that particular buy signal. Or we can call this our take profit sell, or breakout take profit. And if we're taking profit, we want it to really be a profit, so why don't we also say we want the last signal profit here to be more than 2%. Or at least 1.5. I mean, there's no point just churning away trade after trade if we're not going to make too much profit. We'll just end up eating away at our fees. We're eating away at our trading pot with fees. Okay, so that's our breakout take profit. And then let's make a special linreg sell. And we're going to name this one. So again, we're following on the same theme. In that we are going to be trying to catch this rate of change of the slope on the hourly chart, and essentially we're just doing the reverse. So we can use our multi-selector button, highlight them all, and clone them all. Connect them all up. And because we're doing the opposite, we're going to flip the values around. So we want the current linear regression to be less than instead of more than, and the last two to be more than. And I think this time we'll probably sell at market as well. And what we'll find is hopefully this should be, again, catching these upswings and identifying where the top of the swing is. We had a nice 16% gain in that one, that would have been good. And again, we don't want it selling too early. So we can add in another condition to say is the 15-minute price more than its moving average. Like we did in the other sell orders. Because if it is, then we don't want to say, so we'll change that to a less than. So if it is above, then we don't want to sell. So if it's less than, then we can. Any others in here? I think this is also a take profit type scenario. So let's also make sure that we are in profit before we trigger this. Again, we'll add in a stop loss later, so we don't need to worry about that. Profit more than, let's start off with 1.5%. Again, we can always play around with different values in there and adjust it if we need to. So let's take a look at that. Remember, we've added in linreg sell. I mean, 246 trades in 6 months is a lot, so what we will probably do also is try and filter out some of this noise. As we get rid of the bad signals and hopefully try and keep some of the good ones, that win rate will come up as well. So that was a nice signal. Buying at the bottom, selling at the top. Again, you can see this is the trap that we get caught in. The idea of this linreg buy is to catch that rate of change. So we can see here on the hourly chart, the price was falling and then it jumped up a bit. So we bought because we thought that might be the correction, but then it carried on down. So what we'll end up doing is looking to see if we can add some rules in to find out under what conditions this is potentially going to be a false breakout and when we think it's going to keep on going on. So this is when we'll have to start playing around with some other indicators or seeing if we can come up with some other theories as to why this might happen and what we can do to avoid it. Again, as I mentioned, any questions as we go, stick them in the chats. We're live on Twitch and YouTube. Okay, so we've got 100% win rate on this one. Although it looks like we bought and we never sold again, and that's because we've added in the rule that we want these to be selling in a profit. So it wouldn't accept a loss, so we better stick in that stop loss rule. And you can see how these strategies just build up and get more complicated and more complicated. I try not to let them get too complicated. Obviously the simpler the better, but we need to have enough rules in there to make sure that we're only trading in the conditions that we want to be trading. So the problem that I sometimes have with stop losses is that they can be quite difficult to get right. What we don't want to do is stick in a stop loss that's just going to make us cash out anytime that the market is down. So we need to try and make them a little bit cleverer than just are we down 2%? Are we down 5%? We showed you the example last time we did the live stream of here. This is when we added in the stop loss. And we suddenly dropped down to a 35% loss and a 40% win rate. Because again, we just had too much traffic in here. We were selling far too quickly as soon as there was a loss. So let's make a new group. And let's add a few rules in here. So obviously we want to sell at market. There's no point putting a limit order on a stop loss. If you're stopping loss, then you want to stop quickly. I may want to stick some conditions in here. So first of all, one thing I like to look for is a fall in price, clearly. Let's find our biggest loss in the last test and see what we could have done to prevent it. Down 5% there, down 5.8%, down 7%. Where's that one? 6th of March. We'll go to a 15-minute chart. All right. What's up, buddy? So the one thing that we'll see is quite clearly here, falling price. So here we're on a 15-minute chart. So one thing that we can look for is certainly consecutive falling candles. That's one red flag. That was on 15 minutes, but we could also look for hourly as well. Okay, so as we mentioned, we've got 15-minute price, current candle less than, we want less than instead of more than, current candle less than lag 1 less than lag 2 on a 15-minute basis and on an hourly basis. And again, I think I'm probably happy for either of these to contribute. So I'm actually going to stick in an OR block here as a condition block. So either the 15-minute one triggers, i.e. one is less than lag 1 and lag 1 is less than lag 2, or on the hourly basis 1 is less than lag 1 and lag 1 is less than lag 2, which means we've got 3 falling candles on the 15-minute chart or the hourly chart, and if either one of those are the case, then that will be strike 1 for our stop loss. Strike 2. This may seem like rather complicated for a stop loss, but as I say, I don't want to. I want to make sure that we are only triggering a stop loss if we absolutely need to. I think we're going to go back to the super trend example that we were talking about earlier. I like to see a falling super trend because that gives you a good idea. Or some kind of trend indicator, something to show us that the market is trending downwards. I mean, you could have a moving average crossover or a moving average convergence divergence, but I'm going to go with the super trend in this case. High price, low price. And again, we're looking at the hourly to start with, but we can have another play with some different types and see what else we come up with. If we're not happy with how this one performs, we can try tweaking it. There's no point this stop loss triggering if we're not in loss, because we've got nice take profit rules set, so we can also set in a loss profit to make sure that (15 minutes) at the end of each 15-minute candle the profit is less than whatever value we set. Let's start it off with something relatively high. Again, we can have a look at the results and tweak it as we need. So I'm setting that to 0.01. So essentially we're saying, is the profit less than 0? Are we in a loss? The last thing that I'd like to do with this is also just validate that there is momentum flowing out through the volume. So I like looking for a falling average on the on-balance volume. Just a personal preference, not something that you need to follow. Now the on-balance volume does have an indicator block, but it also can be selected directly from the output. So is the on-balance volume less than its moving average? I've got another video on YouTube where I talk through on-balance volume in detail, how it works, what it's used for, so go and check that out if you're unsure. But essentially it's looking at whether volume is flowing into or out of the asset. So we're saying the OBV is less than its moving average. So let's have a look at that. Remember, we added in the LenReg sell, and we've now got stop loss. Well, I think we've got the makings of quite a good strategy here. I do like some of these signals. I like the way that we've managed to pick some of these up just before the upswing with this linear regression. If we can just filter out some of this noise, and a couple of these bad signals, we could turn this into quite a nice strategy, I think. The one thing we do notice is that the LenReg buy completely dominates the breakout. So we don't see many buys for a breakout. And as I mentioned before, we've gone 100% in on the strategy. So what we might find is that if we allow consecutive purchases and put the percentage of the portfolio down a bit, we might see buys and sells in both scenarios. But because we set it to 100%, we're fully in on the LenReg buy. So when we do see the breakout, we're already in the market. So if we can filter out some of these LenReg buys, we'll see more of these breakouts coming back in. because they were generating us some nice profits before. I mean, we even named the scenario candle breakouts. Although interestingly, we are now at 86%. So the market during this period returned 50% and we've gained 86%. But again, as I mentioned, we've only got these Linreg buys. We don't see any of our nice breakout buys. And some of these stop losses are quite slow to come in. But look at that, the way that we'd sell just there before the downswing and we buy back in on the way back up again. So a couple of nice little maneuvers here. And again there, caught the bottom of the swing on the way back up and then sold at the top when it was coming back down. So there's some really nice signals in here. So I think, conscious of the time, I mean, we've been going for an hour and a half now. I mean, to summarize what we did today, we started off building on yesterday's scenario, or Friday's scenario when we did our first live stream. We changed our buy signals to market orders. We put in some extra rules to make sure that we are only buying when we break out. We changed some of our sell signals to build in linear regression slope and the rate of change of the linear regression slope. And then we also tried to build in another buy signal to try and catch the bottom of the downswing as it comes back up again. Again, using linear regression slope. What we found is that the linear regression buy signals are now dominating the strategy. We don't see any of our nice breakout signals that we had before. So I think for the next session, the one thing that we'll do is we'll start looking at how we can get a bit more balance back between that, because we had some nice signals for those breakouts. We don't want to lose out on that profit. And we also built in a Linreg sell, so something that helps us catch the top of these swings. And we started looking at the stop loss as well. Now, the one thing that jumps out when we look at some of these stop losses is they do allow us to swing down, I think, particularly in the early stages. Yeah, -6%, -8%. So one thing that we could look at is trying to get these stop losses to kick in a little bit quicker, but we don't want to do it at the expense of some of our nice gains. So I think those will be the two keys. How can we make that stop loss smarter? How can we make some of these buys smarter? And how can we get back to the profit of some of these breakouts? Those will be our three objectives. But yeah, that was a session. This is the life of a no-code algo trader at the moment. You know, working on strategies. We've got loads of strategies that we've actually are selling on our Argo store. So, you know, we'll be putting them live soon. I'm Brock Algo. If there's any questions, you know, my details are all in my social media channels. You can reach out to me. You know, I do give one-to-one sessions and help people for free, coaching, troubleshooting, any kind of trading related question. If you have any issue at all, reach out to me. I'm always happy to chat to people. You know, you can see this. I do this quite a lot, so yeah, always happy to talk through people's strategies. Feel free to reach out. In the meantime, probably tomorrow, maybe Thursday, we'll do our next live session and I'll tackle a couple of these problems. Nice to finish on a high though, 86%. We're beating the market. Until next time, happy trading, and yeah, see you guys later. But it also can be selected directly from the output.